Welcome back, folks. Dow's flat. Nasdaq is up 27. S&Ps are up 7.5. Let's go over to our man, Mr. Teddy Kekstadt, as we do each and every Wednesday at 40 past the hour. You can reach Teddy, folks, every trading day at forex-trading-unlock.com. The website is forex-trading-unlock.com. Teddy Kekstadt, we got action out here, man.
Yeah, we certainly do. We have, I think, it's kind of funny. Everyone's been talking about how the dollar's hitting, almost 3-year lows right now. But what I think they're not talking about is that it's more of a pound rally than a dollar break going on right now.
Yes.
So,
no doubt.
And that's the hidden. I've always been whenever people ask me what's your best indicator, and well, the market is always the best indicator. If you look at the pound on a cross-rate basis, over the past 2 to 3 sessions, it has hammered the euro, it's hammered the yen, it's hammered the Canada, it's hammered all the currencies globally. So what does that mean? It came back over the past couple of days versus the dollar. So that's the second biggest component in the dollar index, okay? And if you look at the other cross rates versus the dollar, they're barely making new highs versus the dollar. They're just scraping. Whereas the pound was not making new highs for the past week and a half or so. It's been kind of just begrudgingly trying to hold up. Now you've had a spark of buying in the pound versus most currencies,
right?
Especially
and this is like
a
a 2-year breakout if it can hold, right? On
yes,
the pound.
Absolutely.
I mean, the pound looks to me like, hey man, 143 is game, and you're at 135.
Right. And with the pound, too, you got to realize is that as of yesterday, over 57 countries now have completed their deals with the UK. So the EU, not being one of them, is, pretty much settled now with all the countries, major countries for trade around the world. Okay. So that's stabilizing the pound. And I think that's where you've gotten your biggest rush there. So the slide in the dollar right now is more of a reflection of pound strength than dollar weakness right now.
Yeah.
Especially because if you look at the relationship of the dollar versus other currencies, okay, when, sometimes, we have major moves against the dollar and they all trade in tandem, this is where you're having the dollar is not the focus, it's the pound. Now, when you have a relative relationship where other currencies are stronger versus the dollar, this is where you're getting that lift, okay? You see what I mean is that, for instance, the pound is slamming the euro, okay? But since the pound is slamming the dollar as well, that's hurting the dollar. Okay, that's why the dollar is getting hit because of that relationship. So it's not so much that it's dollar weakness that's going on right now as it's pound strength versus even other currencies. So that kind of ripple effect has its way into the dollar index and hits the dollar. So I think the trend, without a doubt, even though, we've been bearish the dollar for a little while here, looking for a bounce, I think that the pressure you're seeing now is mostly because of that. And then we also have the Treasury market. Before you guys had the last break, you guys were talking about the Treasury bonds. Now, there's 2 sides to that story. So the Fed has an open-ended buying policy now of 120 billion, Treasury securities a month. Okay, well, here's the other part of the story that they didn't talk about that was released over the past couple days. And this is not really big news, but it's news that most people don't pay attention to. The Treasury Department and the U.S. government have almost $1.5 trillion worth of treasuries that expire before the end of this year, over the next 2 weeks. Oh. That's a fact. Okay,
that's going to be a lot of buying.
Well, that's because that comes out of the national debt. So that's just re-rolling the debt. Okay,
right.
It's not adding to the debt, but they have to pay it off because the U.S. Treasury always pays. Okay, so now they're selling it out. So this is good because they're giving it back at $100,000 and they're selling it at $170-something thousand. So this is a huge deal for the government.
Right.
But what they're not talking about is, besides that $1.5 trillion that has to be done by the 31st, is we have another almost $6 trillion that's expiring over the next 12 months.
Okay.
So that means that without any addition to the debt, without coronavirus additions on this or whatever we have to do for our country, you're looking at least $7 trillion in debt that will be paid off and then has to be sold into the Treasury bond market.
Okay.
So the Fed has to help buy into this. They're basically shifting from Peter to Paul to help float the interest rate market.
What a great education
this is going to it's going to be a very big impact on the dollar. And I think that because of the bond market staying so quiet right now, this is what the bigger guys are looking at right now. They're looking at the value of the dollar getting just crushed by a big slide in the interest rates, because it's going to be just a fundamental because of the recycling of debt in our country.
Yeah, wow.
You know, so.
Hey, we love this education, man. I mean, that's so cool. Let me ask you something. You know, what happened this morning, folks, is that the Treasury said that Switzerland and Vietnam basically currency manipulators. I mean, Switzerland has always been tough. I mean, you know, it's interesting. What do you think about that? How that, you know, just basically shakes out?
You mean as far as Swiss being currency manipulators?
Yeah, it was like, okay, well, guess what? They've always got the strongest currency. I mean, it's like, really?
Yeah, I think that's kind of somebody has a begrudgingly something against the Swiss.
Yeah.
I don't think, if you want to talk about currency manipulators, you got to look at China.
I know,
You know?
right? That's what cracked me up about it, right? It's like, yeah.
So I think that now, as far as Vietnam, I can't speak on that.
No, I
Swiss,
understood that.
I don't see that.
It just really blew my mind. The same thing, like, okay, the Swiss folks never let their dollar basically get weak. I mean, that's the bottom line. I mean,
right. Well,
that's why
Switzerland,
right?
Right, exactly. Well, remember a couple years ago they did that shakeup where they stopped buying the euro.
That was quite a day.
And that, remember, it took over $1 trillion out of their stock market in hours. You know, but they did that because of the long-term impact of what it would do to their currency and to their economy.
Yes.
You know, I wish we would do stuff like that every once in a while. You know, just once in a while. You know.
Listen, man, there's no doubt it's something else. There's no doubt about that, man.
Yeah. So, but dollar weakness, I think like I said, like right now with this move, if you're depending on what cross rate you trade, we're buffering the highs, newer move highs and higher move lows is a trend that you can't buck right now. You know, I mean, between Biden now have a confirmation of the presidency, you know, and we were talking about this back in October before the election. You know, what is bullish and bearish the dollar? So Biden is bearish, Trump is bullish. So that part of the trend is now solidified. And now when you look at, I'm telling you, these interest rates come the first of the year. I mean, $1.5 trillion may not be that big of a deal, but $7 trillion plus whatever else they're doing next year, that's a lot. That's just a lot, even in today's terms.
It is. And even in our monster bond market, that's a lot. Yeah, that's there's no doubt. Man.
And I bet you the ETFs on currencies and the bonds and the interest rates are going to explode after the first of the year, especially in the options and stuff like that. And you're going to start to really see those volumes increase, I think.
Yeah, no, listen, I can see it. When I think we're at the beginning of a bull in the commodity markets, Eddie. I mean, you know, iron ore is through the roof, copper's through the roof, lumber's through the roof. Oil is still moving. Like, I mean, it's up.
Corn is through the roof.
Corn is through the roof. Beans are going. That's just telling me that this is the beginning of a real commodity run. And potash is starting to move. Okay.
Right.
So you know.
Right.
Well,
watch
listen,
that
man.
CRB, right?
Yeah. It's always a pleasure, man. You have a great week, safe week, and we look forward to speaking to next week, man.
We'll see you before Christmas next week.
You sure will.
Awesome. Thanks, Eddie.
All right.
Stay right there,
care,
folks.
guys.
Tommy and I come right back. We have the Dow down 23. NASDAQ is up 26. S&Ps are up 5. We'll come right back.